welcome in our next guest. Vikas Khemani, founder of Carnelian Asset Management, is with us now to give us a sense on the market, the approach, and what you should be doing given the volatility that we've seen. Vikas, pleasure having you on. Thank you so much for joining in. Just when everybody was heaving a sigh of relief, saying, okay, there's some green, 1 week acha gaya hai, 3% recovery from the lows, today is another volatile day, right? It's that kind of a market. But I want to start with a question on some of the exposures that you have. If you look at the shift strategy, then there's a large exposure to pharma, chemicals, API. This is almost 30% of your portfolio, if not more. Now, what are these companies telling you, the companies that you sort of engage with respect to all this tariff confusion and whether, it's going to be more expensive to ship things over to the US and what's happening with China, whether China will then, since they have tariffs from the US, they will dump in India. It's too many changes going on for a lot of these companies that have that are part of global supply chains. What's the sense?
Currently, right now, they're in an uncertain environment. And, like everybody else, I'm sure these companies also don't know anything. So everybody is in a right now guessing mode. And that's where the sense of uncertainty starts. But I think the fact of the matter is that today, no matter what, America wants, other than leaving tariff, they can't start manufacturing themselves everything back home, right? So just leaving tariff is not an answer. So I'm sure right now, whatever is going on, there's a lot of rhetoric and there's a little bit of reality. And at the end of it, after making so much noise, somewhere I think in the next couple of months it will settle down. If it was so easy, then I think Trump should have announced on that day one or first week, tariff on all the partners, because he should have been clear about his policy. The fact is that they also know that it's not an easy process, and if you are going to around tariff across all the countries in the world, including India, then how does it serve the purpose? So point is that it also will become inflationary in US. So I think I'm sure and this kind of statements and uncertain environment has created a bit of a point of worry for everybody, including Indian companies and investors, rightfully so. So I think I'm sure, in my opinion, the long-term structural drivers of the growth for all these spaces are still intact. There could be this kind of uncertain period which will be there. We will navigate as it comes. I'm quite, I think I'm, more sure that it's not going to derail the entire India story, China plus one story, India manufacturing story. All of them are in place. A little bit of adjustment might happen based on the detail which comes out, which none of us know right now. So we'll see. We'll take it as and when it comes.
All right. Hi, Vikas. Good afternoon and good to see you. When markets aside, how are you feeling about the big win last night? You were in Dubai for one of the games and thrilling, right? Markets,
Absolutely.
A little bit jittery, but I'm sure you're feeling quite good about the win last night. Were you there?
Absolutely. No, I think every Indian is cheering, and it was after whatever happened in the World Cup. I think this was some sort of consolation. But it was
some respite.
Really well. Yeah. Team really played well, so enjoyed every bit of it.
All right, Vikas. Then let's get back to the markets from for someone who's been invested in the markets for so long. The big money is made actually when the markets are brittle, when the markets are a little bit jittery. When it's a one-way direction, then you don't make the big money because you can't get in time. But now you may get a phase where there'll be a good amount of time to buy stocks at a sharp correction. How are you feeling about the markets right now? The consensus is the headline index maybe could make a near-term bottom, maybe 4-5% lower even from here. But what about the broader markets? How are you feeling out there? What is the allocation strategy in the broader markets in particular? Because that's where fear has gripped a lot of investors.
I think, as you rightly said, there's a lot of fear. And this current environment reminds me of pretty much similar environment in some sense in Jan-Feb of 22. If you remembered, Mark, we had a great 2021. Second half of 2020 was great. But, the Ukraine war started and Nifty, which was there at 18,500, corrected during that phase of 3-4 months to 15,500. Geopolitical concern, inflation, all of them were everybody's mind. And, some people were even calling out World War III and stuff like that. And I think a lot of fear was there. And as we saw that, 15,500 became a base after 20% correction. And we had great second half of 22 and 23 and first half of 24. So what I'm saying is that these kind of corrections are par for course in every 2-3 years. Current market also, if you see, we had a great 23 and 24. markets have corrected from 18,500 to 26,500 to almost 22,000. And a lot of froth has got sort of corrected. So I see that it's right now lots of those concerns are kind of played out. You might see some more specific froth in some segments, but that is only cleansing of process in the market over the next couple of months. I think this is a good base for market from long-term perspective. I think this vintage will quite sort of be fruitful, just like how the first half of 22 was. I think last year RBI had sort of squeezed out liquidity in order to defend rupee, and that had created impact on the corporate earnings and economic slowdown in with 2 quarters lag. We have seen RBI has pivoted significantly towards growth with the liquidity and interest rates cut and the entire commentary with government's focus. I do believe that we'll start seeing impact on the economic recovery and corporate earnings with 2 quarters lag. So my sense is that we will kind of form a nice consolidation in next couple of months, and from there, you might start seeing good recovery coming through.
All right, you might see good recovery coming through. Nigel, you spoke about him being present at one of the games.
Yeah.
I happened to, meet him out there as well. And the man was very bullish, not on the Indian cricket team, but India as a country. And he was just waving his flag extremely hard. Vikas, so good on you. We got the championship. We got, some recovery last week from the fall as well. But my question is with regards to what happened in, not just the markets, but the infra space itself. Yeah, you have the visuals of the Champions Trophy playing out, 11 wonderful, champions who've gotten their hands on the trophy. But let's get back to the markets. Vikas, L&T is, one of those stocks you were backing. At the same time, you were backing a lot of these, infra names as well. You did speak about how construction and all that's happening in Mumbai right now is very temporary. The pace at which it's being executed will complete, and we'll actually go back to fast-paced growth in the city itself. So are there any other, themes that you're backing right now in the city infra sort of space?
The infrastructure is a good theme. There's no question on that. In India is building infrastructure, railroad, railways, airport, port. Everything I think is being built at a very rapid pace. Last year, like I said, because of the government, election mode, incremental orders kind of slowed down, and supply, sort of payment release, I think, slowed down, which in my opinion will start reversing. And companies like L&T and many more of them are, kind of beneficiary of that. So I continue to remain optimistic and positive about the entire, sort of construction players, especially, leading companies like L&T, which has been a great wealth creator over the last 4 or 5 years. So, yeah, I mean, other than that, I think, in this year, I believe that banking could be an interesting space to look at because of the pivot of the policy by RBI and the government, where I think, you could see interesting sort of growth coming through in the segment, and stocks have corrected. Last year was underperformer. This year has been so far all right. So I sense that this year, banking as a sector could outperform and could do well. Companies have kind of come into very reasonably good risk reward of valuation as well.
Vikas, I wanted to ask you about the cables and wires space. I recall, if I remember correctly, that you all bought KEI, I think it's 100 crores, if I'm not mistaken, a few 100 crores, if I remember correctly. And you held it all the way, it was a multi-bagger. Now there's a new player that's getting into this space. What is your analysis of it? Some of these stocks have fallen more than 30% from the top. KEI as well. It's down close to 25-30% approximately. Your view on a new player coming in there? There appears there is ample opportunity because there's an unorganized player, section of around 25%, and there's an export opportunity as well. But how would you approach this theme, particularly since a couple of these companies have been multi-baggers for you?
It was, in my opinion, it was overreaction. So when the Asian paint, when the Grasim announced the paint segment, I think market didn't give much impression, didn't sort of pay much attention, and kept on ignoring. And with a 3-4 years, 5 years lag, when they actually came to the market, they made some impact because it was a kind of 2-player market, right? And it's a domestic market. But I think cable, if you ask me, still their capacity is at least 2-3 years away. It's growing very, very fast. And I think within there is a segment of cable and wire. Cable is again a very, very different business. I think they're getting into only wire. Cable requires very long periods of certification and all those things. So, in my opinion, it's quite some time away, and markets are anyway growing at a rapid pace of 12 to 14%. So, in my opinion, nothing major to worry to have this kind of reaction. Of course, every time there's a new player comes, one has to watch out, one has to see what could be the implications. But I think it is still, they've just announced they will do capex, they will, come to the market. By then, I think lots of dynamics can sort of change. So we'll see how it goes. But I at a prima facie, I think it's an overreaction.
Okay, so then a two-part question, Vikas. One, will you buy? And the second part is, what else are you liking in this space? What new themes are emerging after this big correction?
So like I said, I think in this, we've been, one is that, banking is something what we've been liking in this space, in this current fall, looks pretty interesting. Within manufacturing, I think a lot of, pharma companies, CDMO companies have come down. Chemical companies have come down. They look very interesting. In my opinion, you have very interesting ideas where stocks have corrected 30, 40, 50%. Of course, I'm not talking about some of the froth where still some amount of correction can happen, likes of, railways and some bit of pockets of defense and some bit of, but the rest of the pack, I think, you are looking at interesting ideas. In fact, within auto component space, there are some reasonably good ideas. So I think nothing new per se to say that, because ultimately India's story is in about 4 or 5 buckets, and you have to keep looking ideas in those 4 or 5 buckets. So no structural change per se, but yeah, good value, relative value shift one can kind of play out.
Right, Vikas, always good to hear your thoughts. Bullish on Indian cricket team, bullish on the markets as well, and believes there are plenty of ideas out there. Big money is made when the markets are weak. This could be similar to the start of 2022 when the markets pull back, and from there on, we continued our big run. Thanks a lot, Vikas, for joining in. But it's that